General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's knock the workout. Q2. Okay, April. Tuesday, today's the 31st, last day of the month. Today was an expansion day. Let's go here. Sideline, confidence level, medium. Conditions confirmed. Anchor point confirmed. Tuesday. No, I don't think that's the anchor. The expectation Wednesday. No. NASDAQ. Okay. Okay. Asia was a very large range. London consolidated. very large. Okay. What's going on with the screenshot? Okay. What is going on? All right. Yep, remove that. Um, this is the little intermediate term high. Hold on, wait. This is a rebalance intermediate term high because it filled that gap here. Closed above previous day's high. See what this is. It's the daily fair value gap. Completely closed that. Stage 4 fair value gap. We can close that as well. Created a breakaway gap through this level. Okay. And we reached this high and almost closed above it. So this high is Friday from last week. We'll put this in the center. We're almost back to 50% of previous contracts range. Kind of have this as a swing high. We still got quite a few lows here that look like liquidity to me. I think we do another push. This is the 3-bar here. Tomorrow's a news day too. I think I'm gonna target this point 618. What's this 92.8? This is the 0.618 extension. Or yeah, be my target. I still like this as a take profit, but that's gonna have to come back. Take this off. It'll have to be a retester here. Buy from here, which is the old daily fair value gap, or sell from here. When we're selling from here, our first target would still be here because we could buy from here. These lows, it's equal lows in here. Okay, lock this up. Okay, let's get what these people are saying too. Why did the market rally? That's not today. The Economic Times, okay. See what they said. Hold up. At the center of today's rally is a crucial geopolitical shift. Reports suggest that Donald Trump is open to ending the Iran conflict without fully reopening the Strait of Hormuz. The single development dramatically improve investor sentiment. Okay, so the headline say market because investors think Iran conflict almost over. good enough. Look at the daily. Okay, we completely closed this level now. Hold on, wait. Let me go back here because I might have needed that. Okay. All right, that's better. Also, let me see this so I can see where we're at with this. Okay, it kind of lines up with this longer wig. Where's this fib extension? Half of that is still pretty big. Yeah, I can see that. Higher prices. I think we trap some moves for the next news cycle, or for the next event pushes us down. Look for higher prices. I think we trap some moves before the next event pushes us back down. Let's go SPX. Let's go here. Control Z and lock this. I don't want to have to move it. This is Monday's range. Look how we used 50% of this Monday's range. New York AM was choppy. H1. I like how this, well, we're almost through this as well. I still kind of think here is where our deal will form. And I would definitely target this one. We don't have this on this would be the H1 chart. And highs from inverse H4 FEG seem logical to target the highs. Looking for a high of 3 tomorrow. Above the highs. Okay, still saving. Kind of in here. This is huge candle. But at least it's not Monday. Could be a choppy day tomorrow though, based off of that. You know the rule. After large range day, expect chop. This ain't. Here we go. Higher prices for Wednesday, maybe reversal. Let it do that. Let's get the stocks. Get the 30-minute charts on those. Show took that OT the other way though, but it happened pre-market. During the market, we never came back down. This is the H4 FEG. daily opening range gaps over here. Mm, Alright, does make sense here, especially when we got this just weekly volume imbalance. Just what day is this? Thursday. I do like how we opened up here and then just never came back. Just more reversal party. Cool, cool, cool. Yeah, we'll see what we do if we make it up here to this 200, because that's pretty far. I can see a little bit higher maybe, and maybe come back. This gap right here is super naked, which would be the regular trading hour gap. Where do we close here? Yeah. Hold on, this the 30? No, he's the 30. Yeah, I know it's not loading because it's not even saying saving. Oh, there it go. My ideal delivery would be continuation higher overnight with news tomorrow. York reversal to target Tuesday regular trading hour open price. QQQ. See if we got the same thing. What about our old quarterly low? Get this price out. And we do got that. Got us a fresh order block here too. We don't really need it. This is the real expansion. This is crap. 1230 candles, the only candle that's the real expansion. Take a look. So we're almost to this weekly volume balance. Thursday's high is interesting. Thursday 12 o'clock high is interesting. This volume balance is interesting as well. So here we got I like keeping it simple. Low hanging fruit here. Anything higher is a plus. That order block as well. Come on. Okay. Looks like it's ready for a sale. Right now may be easier to catch the buy to sell. I want the reversal to happen after Tuesday high is taken. Alright, so I got my ideas. What I wanted to look like to engage. Didn't engage. Oh snap, oh wait, control. Oh, the ADR was maxed out too early in the day. Who would be needed to engage? Lower ADR and some type order pairing. Needed London low rated to buy. I don't think we got that. Well, we didn't get it when I was looking. For sure. Let's go this way. Boom, boom, boom. Yeah. London. Start the day. No real Judas to take advantage of, so to speak. And these lows still look suspicious. Ran, took this high, and this is basically day over. On my window, on my market price is delivered today. I would call it good reason to stay out. But I wanted to see that show up, so I didn't. If then for the next or similar day, stay to the do not trade filters to avoid subpar conditions. Notes and thoughts. Tomorrow could be choppy. To rule of ranges after large ranges are created. Did framework play out? No. I was looking for reversal. I'll write about pattern narrative for myself. Good. Pick the shots. Follow. Mm, time of day. We watch for tomorrow. I think it is ADP, which should be impactful because everybody's saying the NFP is fake now. So, Forex Factory. 8:15, yeah. ADP employment change. 10 o'clock PMI. PMI. We already got our ideas. We want to see buys from here, sales from here. Buys from here, sales from here. Yeah, I like it. I like the idea. Prefer to sell because it's bigger, but we will see. And I believe that's that on that. All right, y'all. Y'all have a good day. Peace.